Good morning. Jim O'Brien for WyckoffStockMarketInstitute.com. Today's video, we're going to deal with trend channels and counts and kind of a fun move with Wynn Resorts. Trend channels are an important aspect of every Wyckoff trader. Not only do they identify the short, intermediate, or long-term trends of a stock, but they also provide important stop, look, and pay attention signals as a stock tests either the trend channels, supply, or support lines. Trend channels should always be extended, even after a trend is weakened or broken, for it is amazing how many times stocks return to an original trend channel, even after the trend was changed. Trend channels guide stocks as they travel toward their objectives. These objectives are derived from the counts taken on every stock's point and figure chart. In addition to providing objectives, they also suggest when positions should be closed. Sometimes, knowing a larger objective lies ahead allows the Wyckoff trader to maintain an existing position even if the original trend was weakened or broken. This can be a bit tricky, but if Wyckoff rules are followed, it can result in some nice profits. Once a stock has gone through accumulation and met its initial point and figure chart objectives, there can be more important opportunities to the upside. A stock can go through a reaccumulation period to the upside that can suggest even larger objectives. Reaccumulation can be a bit tricky, as often it is not as easily identified as the initial accumulation period. It is also harder to take a new position during reaccumulation. Instead, Wyckoff students who have already taken positions can easily add on to existing ones. Wynn Resorts is an excellent example of a stock that went through accumulation, experienced a spring, rallied, and met an intermediate term objective. However, more gains lay ahead, and after some consolidation, Wynn Resorts put in a second impressive move to the upside. The Wynn Resorts story has some unique twists and turns, but a patient Wyckoff trader could enjoy some significant profits.
The Wynn Resorts story begins with a selling climax at point A on the vertical line chart. This stopped a major down move not shown on the chart, but Wynn Resorts lost over 65 points in 10 months. The automatic rally to point B and successful secondary test to point C broke the downtrend channel and began a trading range that would create the first stage of a major rally. The rally to point D was slightly higher than the automatic rally to point B. The reaction to point C was also higher than the climactic action at point A. This begins to suggest that the sideways movement could well be accumulation. At point D, Wynn Resorts began a long, slow reaction on relatively narrow price spread and moderate volume. As it reacted past point C, supply came into the stock. Remember, the purpose of accumulation is to drive out the weak holders. As Wynn Resorts was trading around $100 a share, it took a while to convince the public to exit the stock. The Wyckoff trader simply watches this market action and lets the stock supply the answers. In this case, the answer was a spring at point E. This was the first time since the end of the rally to point D that strong demand came into the market. Notice the increased volume at point E. It is marked by a red down arrow. In addition, the technometer was in a clearly oversold condition. The spring was the first place to take a new position to the upside. The quick rally to point F was followed by a successful secondary test at point G. The sign of strength was the rally to point H. Then, the stock reacted to point I for a potential last point of support. This was also a reasonable place to take a new position or add to existing one. Unfortunately, the stock market isn't perfect, and the following is just another frustrating example of that premise. After a strong 3-day rally to point J, Wynn Resorts ran into more supply and needed a second reaction to dry it up. That reaction took 11 trading days and was on relatively reduced price spread and volume. The reaction to point K also held slightly above point I. This was the true last point of support. While it does not fit the perfect Wyckoff scenario, the reaction to point K provided another opportunity to take a new position or add to existing ones. Now let's look at the point and figure chart. The first count is from the spring at point E over to the selling climax at point A. It is a count of 34 points. This gives us an objective of $125 per share. A second count could be taken from the last point of support at point K. If I had been following Wynn Resorts during that period, I would have taken two counts. The first would have been from point I. Then I would have added a phase from points I to K. To simplify an already complicated situation, I have simply made this one long count. The total count taken from point K over to the selling climax at point A is 53 points. This gives us an objective of between $144 and $153 per share. The reaction to point K allows the creation of an uptrend channel. The trend channel support line is drawn through points G and K. A parallel supply line is drawn through point J. The trend channel is drawn in blue on the vertical line chart. Again, if I had been following the stock, I would have initially created an upward trend channel at point I. However, the reaction to point K negated that trend, and I have not shown the original uptrend channel on the chart. This can be done because the new trend channel is anchored on two important support areas at points G and K. Wynn Resorts rallied to point N. The high volume just before point N suggested the stock was running into some supply. The high at point N was $123.84. This is just slightly lower than the first point and figure chart objective that was taken from the spring. Point N might be a good place to liquidate a portion of the intermediate term trade and see what the future may bring. If positions taken on the spring were closed, the Wyckoff trader would have seen a 30-point or 33 1/3% gain in just over 3 months' time. A nice intermediate term trade. What about the longer term investor? Are there any indications that suggested holding a position for a more significant return would be helpful? Notice that at point N, Wynn Resorts had consistently put in higher tops and higher bottoms. After point K, it never approached the uptrend channel support line. As expected, strong supply came into the stock, and Wynn Resorts had a sharp 2-day reaction to finally test its uptrend support line. Although the reaction did continue through that support line, price spread significantly narrowed and volume was reduced. More importantly, from the moment Wynn Resorts penetrated the channel's uptrend support line, the technometer moved into an oversold condition. In fact, at point O, it was dangerously oversold. This suggested that we were seeing a normal corrective reaction in an uptrend. In fact, the reaction from points N to O respected the halfway point of the rally from the spring at point E to point N. This suggests that despite meeting its first objective on the point and figure chart, Wynn Resorts has more room to the upside. It is also reasonable to conclude that point O is the more important last point of support. Therefore, a new count can be taken on the point and figure chart. That count is taken from point O back to the selling climax at point A. This is also a good place to take a new position or add to existing ones. It is also reasonable to conclude that Wynn Resorts will rally off point O and return to its original uptrend channel. Unfortunately, that didn't happen. As the stock approached the channel support line, it encountered supply, backed off, tried a second time, failed again, and then reacted to point O1. After the rally off point O, Wynn Resorts put in a slightly higher top and bottom. This continued the bullish behavior. In addition, at points 01, the technometer has returned to a dangerously oversold condition. More importantly, it is more oversold than it was at point O. It is an extremely bullish indication when the technometer is more oversold than it was on the previous reaction, and the stock is higher than it was on the previous reaction. This continues to suggest that Wynn Resorts has more room to the upside. Points O and O1 are good places to add to existing positions. Because we have seen these higher tops and higher bottoms, and a bullish indication from the technometer, it is reasonable to draw a new uptrend channel. The support line is drawn through points K and O. The parallel supply line is drawn through point N. The new trend channel is shown in red. This does not mean the original trend channel should be ignored or deleted. I have found the trend channel should always be extended, as they can be of help somewhere down the road. Wynn Resorts rallied off the last point of support at point O. It continued in its new trend channel and stayed within the channel until it moved into a slightly overbought position relative to the trend channel. It reached $144 per share at point P. As you can see on the point and figure chart, this was in the objective area of the count from the original last point of support at point K. This was another opportunity to close the trade and take profits. To make it easier to view, a section of the point and figure chart between points K and P has been removed. However, additional counts provided objectives that suggested that Wynn Resorts had quite a bit more room to the upside. The next objective was based on a count taken from the last point of support at point O. This provided a new objective of between $175 and $188 per share. When Wynn Resorts reached point P, it had moved into a slightly overbought position relative to its new uptrend channel. The reaction to point Q held above the channel's support line. Then, after a small rally, Wynn Resorts reacted to point R. The higher bottoms added credence to the continued rally scenario. In addition, Wynn Resorts was in a clearly oversold condition relative to the technometer. Wynn Resorts rallied as expected and reached $173 3/8 per share at point S. This was just slightly below the minimum objective of $175 per share. The technometer was in a slightly overbought condition. This was another place where profits could be taken. After its $83 rally from point E, Wynn Resorts needed a bit of a break and went through a period of reaccumulation over to point V. There was a spring at point U and a successful secondary test of that spring at point V. Then, Wynn Resorts rallied strongly to point W. Because there was no reaction between points V and W, the entire move can be categorized as a major sign of strength. Then, the stock reacted to point X for a last point of support. In addition, Wynn Resorts has left its trend to the upside. This sends a strong signal that the stock has even more room to rally. Because of its relative strength, it is now appropriate to draw in a new trend channel, but this time the uptrend can be defined using the reverse use of trend lines. On this type of trend channel, the supply line is drawn first. In this case, it is drawn through points S and W. A parallel support line is drawn through the low between the 2 points at point U. This trend channel is drawn in gold. The first count is taken from the secondary test at point V over to point T. This gives the stock an objective of between $180 and $194 per share. Wynn Resorts blew through those objectives on the sign of strength rally to point W. This allows for a second count to be taken from the last point of support at point X. The count has two phases. The first is from points X to U. The second from points U to T. As these charts are getting rather full and slightly confusing, the second phase has been left off the point and figure chart. The count from points X to U provided an objective of between $213 and $245 per share. Wynn Resorts rallied sharply off point X and reached a high at point Y at $249.10 a share. At point Y, it was in an overbought position relative to its uptrend channel using the reverse use of trend lines. In addition, it was in a critically overbought position relative to its technometer. The stock had slightly exceeded its last objective, and this was probably a good place to finally close all positions and take profits. After reaching the high at point X, Wynn Resorts reacted. Eventually, it bottomed out in the area of $50 per share. Wynn Resorts is an interesting example of how a stock can provide short, intermediate, and long-term profits depending on the attitude, patience, and objectives of the Wyckoff trader. There are lots of opportunities like Wynn Resorts waiting for you. You can find them by using these profit-making Wyckoff strategies, including samples of relative strength and weakness, trends, trading range phases, the opening and closing of positions, and many, many more. They are all found in our Wyckoff ebook called Wyckoff Strategies and Techniques, Finding and Trading Winning Stocks. The book is an updated version of the more expensive Wyckoff course in stock market science and technique. As a special bonus, a free audio recording of the ebook is included with every single purchase. The audio recording has its own set of charts that make it easy to follow along as you learn about these wonderful Wyckoff trading tools. Learn more about how to make better, more profitable trades by using these time-proven Wyckoff strategies and techniques by simply clicking the link below.